Hi everyone, a very good Thursday evening. My name is Ramesh and I welcome you to another session of Orange Tea and Chai's Consumer Empowerment Webinar. We will be starting in about 5 minutes. Thank you for tuning in early. We will wait for a few more guests to join us, so just stay tuned. Thank you. Hello everyone, a very good Thursday evening. My name is Ramesh and I welcome you to another session of Orange Tea and Chai's Consumer Empowerment Webinar. Orange Tea's Consumer Webinars aspires to empower every potential property buyer or seller out there with the latest market research and news trends right from the comforts of your home. Our carefully selected speakers in the series will be sharing with you key insights and latest research in the property market to help you make informed and prudent decisions on your future property plans. The speaker for today is none other than Ms. Christine Sun, Senior Vice President, Research and Analytics at Orange Tea and Chai. Christine has more than 20 years of research and consultancy, sales and marketing experience. Having worked for a few leading developers and real estate agencies, Christine has garnered vast experience across residential, commercial, hospitality, and industrial sectors. With a strong marketing background and handled more than 1 billion property sales accounts, Christine's research work is highly market relevant and consumer-centric. She is sought after by developers, investment firms, banks for consultancy services and property advisory. If you find Christine's name familiar, it's because her research and analysis has been regularly featured in the local media and news platforms, Bloomberg, Reuters, BBC, CNBC, International Herald Tribune, South China Morning Post, and global media platforms in Europe, United States, Canada, Australia, China, and many parts of Asia. The topic for Christine's talk today, catching the next wave, why luxury properties? Christine will be covering past and present luxury market trends in Singapore, and what are the likely future trends to look out for. A gentle reminder for listeners tuning in, if you have any questions pertaining to the talk or property market in general at any point during the session, all you have to do is click on the Q&A option at the bottom of the screen and type in your questions. We do have on standby a panel of real estate veterans and experts to answer all your questions. I'm sure all of you are waiting eagerly for the talk to start, so please invite Ms. Christine Sun. Christine, over to you.
Hello, everyone. Thank you for tuning in to today's consumer seminar. I'm very pleased to share this topic, which is catching the next wave, why luxury properties. I think this is one market segment that will be of interest to all of us, because we know that with borders reopening in many countries, definitely the luxury market will be the one that will benefit the most. So today I'll be touching a bit more about what are the past and present market trends for the luxury segment, and also be talking about what will be the future outlook for the property market. So to begin with, I always like to look at what's happening to the global market, because that will have a major impact on what's going to happen to Singapore. So right now, I will do a very quick summary of what is the global economic outlook. So if you look at some of these headlines, news that is happening over the past few days, you can see that there's already a lot of talk that is happening in the market right now, talking about people are expecting an economic recovery for many countries because of the mass vaccination that is already being kicked off in many countries. In fact, if you look at what's happening in US, China, even in many parts of Europe, and even in Singapore, the mass vaccination is actually proceeding much faster than expected. And since the vaccination has started in December, we're already seeing quite positive signs that's happening in some of the countries that have stepped up their vaccination. So I will touch on that more later. But of course, if you look at some of this news, like for instance, like this one by Bill Gates, he's expecting that the world will be back to normal by end of 2022. In fact, by the second half of this year, already a lot of countries are expecting travel to resume partially, and there could be more sectors that will be open worldwide. However, if you talk about economic recovery in Asia Pacific, I think most of the countries or most of the analysts are expecting an uneven growth. Okay, already people are asking about the recovery. What sort of shape would it be? Would it be a V shape or a 90 swash shape or whatever? But if you have attended my talk that I conducted the last time, we talked about K-shaped recovery, where the K-shaped recovery talks about there'll be two divided type of recovery. One is those people who are doing well, they will probably be recovering faster, but those people who are working in other sectors that have been affected by the pandemic, likely the economy, their economic state will be slower. So even right now, with mass vaccination, I think that division will likely divide even more, because already we see that not only in terms of the economic standards, that there is a wide disparity, even in terms of distribution of the mass vaccination. Vaccination, the pace is being rolled out, and the type of vaccination that is being rolled out will make an impact on which one or which countries will be able to recover faster. So of course, we know that for advanced economies like US, UK, even some of the other countries like China, Russia, they are actually stepping up quite fast. But in terms of third world countries, it's actually quite slow. So if you look at that, that will have some impact in terms of the recovery in different countries. Then of course, for Singapore, if you look at this recent article that has been published, even our DPM, Mr. Heng, is saying that he expects Singapore's economy to recover in the second half of 2021. So what happens is that if you look at this one, this is a latest figure that was released in March, where MAS actually says that, or MTI, they say that Singapore's economy is expected to grow 5.8% this year. And we are expecting the figure to be even better than their earlier estimates, because we see that a lot of sectors are actually picking up much faster than what they have projected. So if you look around you, if you are someone like myself who likes to go shopping, go to all the retail malls, you'll see that already in terms of maybe F&B retail shops and all this, they are actually very packed right now, shopping is almost like going back to normal. And in fact, like events, seminar spaces, weddings, they are all going to be rolled out even more in the second half of this coming month, April. So we may expect even like other sectors like hospitality, mines, all these different sectors to recover even gradually from maybe the second quarter of this year. So what will impact the states of recovery for be it Singapore or the whole worldwide? I think there's a few factors. Like mentioned, vaccination adoption and efficacy will definitely be one of the key drivers, because we already know that countries where a lot of people are being vaccinated, they are already talking about having this green belt, is it green belt or the green lane, where people can travel to and fro without even the stay home notice or even serving quarantines. And of course, with that stepping up, then of course the transactions and economy will roll off even faster. Then of course, which type of vaccines that the country has adopted will also make a difference. Like for example, like in Singapore, I think we are very fortunate that we have this Pfizer and Moderna, because it has been proven that these vaccinations are actually very effective. In fact, yesterday there was a news that came out, latest news that covered that even the vaccination is proven to be effective even for teenagers, because they have tested like for those people from 13 to about 18 years old and found that it's effective. So if that's the case, then they will continue to roll out for even the younger generation. But if you look at some countries that are using, I think is it the AstraZeneca, I think because there are some concerns about blood clots and stuff like that. So these are the countries, in terms of the vaccination adoption, may slow down a bit. So that will be one thing to look at. The other one is, if you look at the sectorial recovery, will have an impact on GDP, because it really depends on which are the sectors that each of the countries are more dependent on. So let's say, example, if you're talking about like countries like Thailand or even places like Bali, they are very heavy on tourism. So some of these countries may take a longer time to recover from the pandemic impact. But whereas like countries like even Singapore, because we are quite heavy in terms of maybe biomedical concentration, or we are quite good in terms of like technologies, digitalizing some of these, even like our banking sector and stuff like that. So countries like Singapore will likely be able to recover faster. Then of course the stimulus and economic policies will also make a difference. If you look like, if you look at US, they have already approved the 1.9 trillion new stimulus that will be pumped into the system. I think that will make quite a big impact in terms of the liquidity that will be in the market. So we may expect real estate markets to continue to see the inflow of capital coming in, and of course recovery capacity and new economic landscape. So for instance, like how well certain countries are going to maybe adopt this new working style, or how are they going to continue to change the way they work their economy around this pandemic. Because we know that even with vaccination, I think some of these challenges will continue to be around, because we know that vaccination can protect, but it's not foolproof. So there will still be certain changes, especially for certain industries like maybe the commercial market, hospitality, and so on. How are they going to adopt, and how are they going to move around, to change themselves? So if you look at vaccination, right here, you can see that this is one chart that shows the vaccination process that's going on. So this is actually one of the latest chart. It was updated last week. When they talk about, if you look at this chart, actually is quite encouraging, because it shows around the world what is the adoption of the vaccination. So you can see that a lot of these countries down here, like America, and then of course Russia and Australia, and even parts of Asia, many countries are actually rolling out this vaccination. But of course, if you look at like third world countries, in some of the regions, it's actually quite slow. So again, the economy is dependent on one another. So that's why there's a lot of talk about us, the third world countries asking the others to share their vaccines. Then the other one is that if you look at this, what about the vaccine doses that has been administered? If you look at like Israel, I think they are one of the very successful countries. Almost every adult has really been vaccinated, and it has been proven to be quite effective, and they have really taken off their mask. If you look at some of the world news, so this is a very good, I think it's a very hopeful situation for other countries who are trying to adopt the same thing. Like let's say example like in Singapore, I think if we look at the example of Israel, the successful implementation of vaccination and how their economy can continue to go back to where they were, I mean, the normalcy that people are looking at. So I think that will be something that maybe Singapore can look forward to in the second half of this year. So the other countries, if you look like, let's say example like US, and even if you look at China, Mexico, Russia, right? All these countries have actually started vaccination quite early, but because of the size of their population, the rate that their vaccination is actually not that high. So perhaps some of these countries, to go back to normal may take a while more. Then of course, what about Singapore? If you look at Singapore, Singapore has actually one of the highest vaccination rate. If you compare with the other countries here, and if you look at this chart here, it actually shows that the darker the blue, it shows the higher the percentage of population are being vaccinated. So if you look at here in Singapore, it's actually quite high. And around us, like Malaysia, Indonesia, all these countries, right, they are also vaccinating the people. Of course, if you look at the other parts like Australia and some other areas here, you can see that they are slightly slower. But I think it's really quite encouraging because from December up to now, it's only about three months plus, and already you can see that vaccination is rolling out very fast. So this is a very good indication that the faster the mass vaccination is going to be rolled out, the faster will the economies in all these countries catch up. So what about the other factors? Just now we also mentioned about the size of the stimulus will also determine the rate of recovery for the global economy. So if you look at here, this is quite an interesting chart because it actually shows you what type of stimulus or the amount of stimulus that has been pumped into the system by the different countries to help the economy during the pandemic. So I think during one of our talk, we talked about, in the past, property price usually fall during an economic crisis. And in fact, in 2008, the financial crisis, you can see that property prices in Singapore has actually dropped as well. But why is it that this time round, we are hearing news of prices of properties rising even during the pandemic? And Singapore is definitely one of the countries, because if you see the flash index, flash estimates that has been released today, it actually shows that for both the private residential market and HDB resale market, prices of homes have increased by another 2 point something percent. And that's like for both markets is the fourth consecutive increase in prices. So why is it so? So this is a very good chart because it shows you the amount of stimulus that has been pumped into the system as compared to in 2008. So for instance, if you look at this chart for Germany, Japan, or even France, you can see that the amount of stimulus that has been pumped in is almost like 10 times more than what we saw in 2008. So this will be a very good indication why we may not expect prices to fall. And already we have seen that prices, instead of falling in a lot of countries like US, even like parts of Europe, even like maybe Korea, Australia, many countries, New York, all these cities, right? They are seeing that prices have actually hit even new highs in recent months. So this could be one explanation. And also, instead of in fact, if you look at the size of the stimulus, if you compare it with the GDP, many of these countries, like even like Japan, Canada, Australia, a lot of this stimulus that they have pumped in is actually they take up even almost like more than 10% of the GDP, the amount of GDP in their country. So you can see the amount of money that the government has pumped into the system. So with that, now we move on to what about the expected global economic growth. If you look at this chart, it actually shows you that the darker the color, the higher the GDP growth that they are expecting. So already you can see that most of the countries around the world are expecting a positive growth for this year. And in fact, many countries, like if you look at like here, down here and here, you can see that many of them have actually projected even more than 5% growth. So if you look at this chart here, again, you can see that there is actually a correlation for these countries to project higher growth. They are the ones that are actually having a faster rate of vaccination as well. And this is from IMF. They are projecting a 5.5% global economic growth for this year, and for advanced economies, 4.3%, and developing economies to be 6.3%. Okay, so of course, this is coming up from a very low bottom because of the negative growth that we saw last year. But later on next year, they are expecting growth to drop slightly. Again, it's because there is a high base down here. And what about the different countries? If you look at the different countries around here in Asia, countries like Philippines, Malaysia, Indonesia, everybody is actually projecting a growth that is more than 5% for this year. And for Singapore, we are projecting 5.8%. And if you look at this chart here, you can see that the increase in the GDP growth is expected to surge up for the next 4 quarters. And what about the bigger economies? If you look at countries like China, they are expecting about 8.1% increase. India about 11.5%, and of course the other countries will be around 3 to 4%. Okay. Then what about the other factor that we have to look at, which is interest rates, because we know that interest rate has a very big impact on property prices as well. So if you look at here, this is by the Fed. What happens is that straight after US announced that they're going to release $1.9 trillion into the system, there was a lot of concern whether interest rate will increase because they are expecting inflation to rise. So, to address that inflation rate, they have to increase interest rates. But what happens is that Fed came in to say that they have signaled that there will be no rate rise even until 2023 to 2024. So, already right here, we are almost near to the 0 mark, and they are expecting to remain low for quite maybe for the next 2 to 3 years. So because of that, if you look at here, this is a chart that shows what happens to Singapore's property prices during, if we put, the sales volume together with this interest rate. You'll see that every time when interest rate goes down, let's say example like Asian financial crisis, usually sales volume will spike up. Okay, and then the same thing happened down here during 911 and SARS period. There was a lot of people coming in to buy properties because right now mortgage is actually more affordable, and people are able to afford the loans. So again here, global financial crisis, when there was a major dip in terms of interest rates, you can see that straight after that, you can see sales volume coming up. So right here, right now we are down here. We know that interest rate has come down, and they have already said that they will be maintaining rates to be low. So if the same trend is going to happen, then we can expect sales volume to remain to be quite high in the coming months. So after I've gone through the global economic outlook, maybe right now we'll look at what about the general property, residential property trend in Singapore. If you look at some of these articles, I think Singapore is one of the countries where it has caught the eye of international media, where they see that Singapore's properties, right, are very popular among investors around the world, especially during the pandemic. They have seen that not only Singaporeans are buying, some of the foreigners are actually buying even when they are not in Singapore because of the travel restrictions. So what some of these articles that you can see is that, because of the high sales volume, sales rebound, and as well as the prices, how prices are holding very firm during pandemic, they actually say that Singapore property market is actually weathering the recession. And in fact, many Singaporeans are stepping up properties during the worst ever recession. And recently, there's also quite a bit of talk about en bloc fever coming back. Many of these projects that have not been successful in the last en bloc sales, they are coming back. So in fact, you are seeing here, more and more projects that are being relaunched. So again, there'll be some question whether, since many of these stock that developers have been selling are actually diminishing, so are they ready to buy more land soon? Okay. So when we spoke to some of the developers recently, I'm sure we do hear of some of the developers are keen But of course, big en bloc sites will still be quite challenging. But for attractively priced en bloc projects, I think they are quite keen to look at them as well. And then, of course, right now we are hearing things like, for example, like this one, 20 units of a luxury development called Eden that's been sold to one buyer. And even yesterday's news where it talk about, one of the, I think this is a new citizen who bought Nassim Road good class bungalow for about $129 million. So all these, headline grabbing news actually signals that many of these high end high net worth individuals, or the ultra rich, they still have appetite for luxury properties, and they're actually on the lookout for good investment properties. So right here, okay, the new data is not out yet. The data will be out in 3 weeks' time. And what we see is that after 3 consecutive quarters of negative GDP, okay, this chart shows the GDP growth in Singapore. And then after that, we charted with the sales volume of residential properties. You can see that here, after 3 negative growth, the sales volume is actually still going up down here, very strong. So this is actually quite in line with what we have seen in other crises. For example, like Asian financial crisis, straight after GDP drops, you can see that sales volume has actually gone up. And same thing for 911, and the same thing for the global financial crisis in 2008. And this cycle has repeated. And you can see that after that, what happens? You can see here that actually sales volume continue to spike up for quite some time here. So if there are no, let's say example, there are no cooling measures or anything drastic that's going to happen, we may expect sales volume to continue to go up, especially since just now we have mentioned that interest rate is actually quite low. And what happens to property price index? Okay, so this is again the first time it has happened that during a negative GDP growth that prices didn't fall, because we have actually seen Asian financial crisis happening, 911 happening, and global financial crisis as well. So this is the first time that prices didn't fall during an economic crisis. So in normal times, you can see that prices actually didn't fall. So that begs the question of whether property prices are going to fall later. So with that, I think the window of opportunity is almost over, and yet we didn't see prices falling, and in fact, it's actually increasing. So this is quite interesting. Like mentioned just now, I think this could be partly due to the big stimulus package that has been released all around the world, 10 times more than what we saw in 2008. So this may explain why prices of properties around the world has not dropped, in many of the advanced cities. And in fact, many of these new properties this year has been selling quite well since the first month of launch. So these are some examples, like for example, like Momentum Park, they have actually sold 645 units during the first month. And so is this EC Park Central, sold 400 over units. The Reef at King's Dock, which is near Harbourfront, sold around 200 over units. And Midtown Modern, which is an integrated development, sold 300 over units. So you can see that, it's quite in tandem with what we have seen all around the world, where prices of properties are holding firm, and demand for properties is actually very strong, because a lot of people are expecting the global economy to recover and things to pick up very quickly. So this is one of the chart that shows a general trend. You can see here that across the different market segments, here are non-landed and landed properties across all districts, new sale, resale, sub-sale. You can see that for the last 3 quarters, this is the latest Q1. Still, the full March is not in yet, so I think the volume will still be slightly higher. But you can see that these 3 months over the last 3 quarters, in terms of sales volume, is actually higher than what we saw even before the pandemic in 2018 and 2019. So this shows that sales is still quite strong in Singapore. And because of the strong sales volume, you can see that prices across the luxury segment, rest of central region, which is the city fringe, and mass market homes are all either going up or is still holding firm. Okay. So right now I'll go on to what's the market performance for the prime districts. So if you look at here, the core central region, which is the prime district, includes like districts like district 9, 10, 11, even like 1 and 2, and parts of 7. You can see that it's quite similar, where the luxury sales volume is actually going up. So this is actually quite in tandem with our expectation, because we know that during a pandemic, normally if people want to buy properties, they'll try to buy properties that are more affordable. So that's the reason why the mass market and city fringe homes are the first ones to go. Then as the economy is going to recover, you can see that more and more of the high investors are actually coming in. And in fact, when I saw just now I just look at the data for foreign buyers, we have actually seen more foreign buyers coming in over the last 1 month. Maybe because you can see every day there are quite a lot of PRs and even some of these business travelers coming into Singapore. So that is the reason why you can see that the luxury segment is actually picking up over the last 3 months. And with that, you can see that for new properties in the luxury segment, in the core central region, you can see prices is actually going up. And in fact, resale prices is also coming up gradually as well. And what about in District 9? District 9 includes areas like those places in Orchard Road. You can see also it's the same situation, where you can see sales volume is actually going up as well. And you can see from here for Q1 2021, which is the last quarter, January to March, sales volume is actually even higher than what we saw in 2018. So you can see that there's actually quite strong sales in that sense for District 9. And in fact, prices is actually going up as well. So these are some of the best selling projects since the start of last year to the first quarter of this year. So of course, the best selling project was the M, which sold around 500 over units, so 400 over units, and then Midtown Modern as well, and then Copa at Newton and 4th Avenue, Leiden Green, and RV Altitude. So some of these projects, if you look at these prices, actually some of them are quite attractive, but some of them are actually at the higher end as well. Like for example, like Midtown is actually touching almost 2008, and some of these like RV Altitude is also around 2007. What about resale properties? If you look at resale properties, those that have done well for this same period of time will be Marina One Residences, 8 St. Thomas, the Leiden, the Sale, Icon, and Soleil at Senara. So you can see like even like 8 St. Thomas, they sold around, they're also selling around 2008. So if you look at this one, this is a chart that shows what is the latest transacted price. You can see that in Orchard Road, there are actually some properties like Scott Square that's transacting quite a higher end, which is around 3,005 per square foot. 8 St. Thomas is around 3,000 per square foot. The Vernier around 3,001. So these are some of the high-end properties that are transacting in the District 9. And for District 10, these are some other projects that have done also very well. Like for example, like Royal Green, Geneva Hill, Leiden Green. All these are actually transacting around 2007. And there are also some which are transacting at 3,000 plus, like Delvey House and Van Hollen and so on. Okay. If you want to find look at these slides more, you can always talk to our friendly Orange Tea agents who will be able to share more with you, because I'll be passing some of these slides to them. So you can look at the charts better later. So if you look at who exactly are buying luxury homes, many people are actually quite surprised, because they thought that foreigners are the ones that are buying. So in the past, yeah, there's a bigger proportion of foreigners. But if you look at even during the pandemic, because of the travel restrictions, actually we see more Singaporeans coming in to buy luxury properties. And when we look at these people, some of them are actually young couples, some of them are even singles who are buying. Maybe because they are the ones earning a higher income. So some of them could be doctors, lawyers, those working in the tech firms, bankers. And that's the reason why in recent months, we have seen more Singaporeans coming in as well. And of course, some of them are new citizens. Then the other one is that in District 9, similarly, you can see down here since the start of the pandemic, Singaporeans are the ones that are buying luxury homes, and it's quite a high proportion as well. So here, what about the amount of money that they spend? So if you look at this chart down here, over the last 3 quarters, you can see that generally people are paying slightly more for luxury properties. So if you look at here, let's say example, in this chart, these are properties that are above $2 million. So you can see over the last 3 quarters, they actually constitute a higher proportion of homes that are being sold. So actually, it's not really true that when people are saying that, luxury home, the market is actually not doing well because of the pandemic, so they have dropped prices, and that's the reason why Singaporeans are coming in to buy and so on. If you look at this chart, it actually shows you that no, actually people are coming in to buy luxury properties, and in fact, they are paying more for luxury properties than what we have seen even before the pandemic. So it actually shows that this is what we call the 深藏不露. A lot of these Singaporeans actually they are really quite rich. They're just waiting for the opportunity to come in to buy. And because recently there have been quite a few luxury home launches, so they are coming in to pick up some of these projects. So what about the investment potential of luxury properties in Singapore? So what we have done is that we have looked at those new homes that have been bought over the last 10 years, and they have been resold over the last 10 years. And then after that, we match unit by unit, and then we calculate the gross profit after the sales, and we chart that out. And from here, you can see that many of people who bought luxury homes during the last crisis, they have actually made profits. So this is the amount of profits that people make and the number of people who actually make the profit after selling. So you can see that down here, there is a higher proportion of people selling and making profits, likely because in the past, there was no seller stamp duty. So, there were more sub-sales and so on. But later on, because of all the other restrictions and also because of a change of mindset, there are many people who actually buy the luxury homes and then they keep for long-term investment or for their own stay or for rental. So that's also the reason why you can see that there are actually lesser transactions later on. But even then, if you look at what's happened at the back here, the number of people who actually make losses is actually not that much. But those people who make profits, like for example, like those who sold, right, they actually can make quite a bit of profit. Like some of these regions, they can go up to 1 point something million of profits that they have made. So similarly, for homes in River Valley, you can see that it's quite a similar trend where many people have made profits down here. And in recent years, down here, there are also some who have made quite a high amount of profit as well. And for District 10 as well, District 10, because there's a higher concentration of luxury properties, so you can see more transactions as well. Okay. Then what about capital appreciation? We took some examples, like let's say this one, I think it's 1 Devonshire. You can see that prices of these properties is actually on the uptrend. So those people who bought new sales down here, generally, most of them have actually sold their units for profit or higher price later on in the resale market. And this is also another project similar. I think it's Martin Place Residences, which is at River Valley. You can see that it's also a very good uptrend, a positive capital appreciation for properties. People who have bought the homes in this project. So you can see here where they bought the units down here as a new property. And after that, when they resold it, most of them have actually made profits here as well. So what is this is the last part where we talk about what about the property outlook? What are we expecting of the market? Because just now we have already mentioned that I think globally we are expecting the economy to recover, and even for Singapore as well, we are looking at opening up our economies. Travel will soon start to gather pace, as well as other sectors like hospitality, maybe like mines and all these all these services, they will start recovering very quickly as well. So what will be the outlook for a property market? I think we cannot I think that there's a lot of talk about because prices of homes have been rising so fast, so will there be cooling measures? Okay, so we are not very sure what the government will do, but I think when we buy properties, we should look at Singapore in the long-term perspective, because we know that with some of these measures that have been put in place, it's now quite hard to speculate on properties for the short term. So there are certain things that you have to ask yourself. What do you think of of Singapore as an investment destination? Do you think that this is a place that you want to park your money for at least the next 10 years? So this is one example of, we have always been seeing that Singapore is best in this and that, best country to bring up children, most safe country, stable, and even despite the pandemic, I think Singapore is still rated as one of the best country to relocate for work. Okay, so this is one of the latest article, again published in March, where they talk about especially after pandemic, when things are travel cross country traveling will start happening again. Most likely, people will start coming back to Singapore to work, and then of course students will start coming back, and we can see the rental market may start to pick up again. So this is one of the very good indications of what the world see about Singapore. And also this is another one. Again, this the latest one of the survey that's been done on city investment prospects, and Singapore is actually rated as generally very good. In fact, top of the chart in this survey that has been done to say that Singapore is one of the cities that is worth investing in. Then of course, because of apart from what happened during, we know that there are many cases in the dormitory, but by and large, you can see all the news happening all over the world saying that Singapore has generally handled the outbreak very well, and it's actually won the praise from WHO and even from other recognition from other countries as well. So this will go a long way because it shows that even in the worst pandemic, Singapore is one of the safest country, and we are able to handle such a crisis even better than many other advanced cities. So this is actually very good for Singapore. So if you want to, think about investing in Singapore, especially like your friends from overseas, these are some of the things that you can see about Singapore. And of course, the other one is that what's going to happen to the luxury market? Will there be more or less people buying? So the number of billionaires in Singapore and even in the world will have an impact, because we know that with more billionaires being groomed or whatever. So you can see that more people will likely be buying luxury properties in Singapore. So you can see down here, this is one of the latest articles that says that Singapore actually deals a lot of rich with friendly rules and subsidies. And even this is one of the latest data that has been released, where it shows which are the countries where there will be a population boom in terms of ultra high net worth individuals. So one of them will be Indonesia. They are expecting a big boom in 2020 to 2025. And the other country will be India. And of course, this is very important because we know that even for US as well, because we know that Indonesia, India, and even US, they are actually the top foreign buyers in Singapore. So with that, we can expect more foreign buyers to come into Singapore in the next few years. And of course, for Singapore, the number of billionaires have also grown. We also know that there are more and more new citizens, or even foreigners coming to relocate to Singapore. So you can see the number of billionaires in Singapore has also shot up by quite a lot, and they are expecting many more, in the next few years. And of course, this is one of the articles that has just been published on Sunday. In one of the study they have done, we have also seen this luxury market is no longer just for the rich, because when I look at the data about HDB upgraders, okay, those people with HDB addresses, we actually see that there's actually a growing number of HDB upgraders buying luxury market. So in the past, they will either upgrade from HDB to ECs or to mass market homes. But right now, they are actually jumping the step. Many of them actually recognize that it's better to buy, let's say, city fringe or luxury homes, because if you are looking at investment value, of course, high risk, high return, and if you have the capital, you buy a more luxurious property, you'll be able to make more profits. So that's the reason why many young people are actually jumping the step and actually entering into a luxury market. So in the next few years, you can see that the Singapore's luxury market is going to be quite vibrant, because we know that more foreigners will be coming in, there'll be more billionaires, economies are going to recover, and in fact, even Singaporeans are actually upgrading and going into the luxury market. So this is our market outlook. This is our projection. We are still projecting that property price will increase 2 to 5%. but we will likely revise this upwards when the actual numbers are going to be released in 3 weeks' time. And we are quite sanguine about the whole property market because we are barring any cooling measures or anything drastic that's going to happen. I think property prices are going to rise across the board, and of course, will likely see more activities in the resale market as well, because we know that new home sales have been tapering down. A lot of stock has really been sold. So right now, the next market that is moving is the luxury market. So people are now catching up with the market trend, and that's what we are going to see in the coming months. Okay, so that's the end of my talk. Thank you very much for tuning in. Right now, I will pass the time back to Ramesh.
Hey, thank you, Christine, for your latest property insights. Always a pleasure to listen to you. With the global recovery underway, luxury properties in Singapore definitely seems to be in the spotlight for now. One statement I found very intriguing is that the window of opportunity is almost over. So for property hunters tuning in who are equally intrigued as me after listening to Christine talk, I'm very pleased to introduce to you my next speaker, Alex Goh, Senior District Director at Orange Tea & Thai. Alex has over 12 years of experience in the real estate industry, and he's also the key appointment holder in a number of new project launches, which includes the Crest, Sterling Residences, the Woodleigh Residences, Bishopgate Residences, Park Colonial, and the M. Alex is also a company trainer and an avid property investor himself. Today, the topic he's sharing with you is what's next, spotting the next hotspot in CCR. So I'm quite curious to know what he has to share. So without further ado, Alex, over to you.
All right, thank you, Ramesh. Okay, can I just have a sign that you guys can hear me? All right.
All good.
Great. Okay. Good evening, everyone. Thank you for taking time off after dinner, or if you have not joined your dinner, feel free to have a dinner while listening in. Okay. Thanks a lot, Christine. It's always a pleasure to listen to you speak, and it's always pressurizing to speak right after you. Okay, because you are such a good speaker and it's always backed with data. Okay, ladies and gentlemen, so let me just share my screen over here. Okay. All right, so tonight my topic is actually slightly different from Christine. Christine, I think from her sharing actually is a very few interesting point. Like for example, against a pandemic backdrop, the worst economic crisis that we've seen in the near future, I mean this recent years, okay, the property market actually behaved very well, okay, despite all those technical analysis we're talking about 1 year back. Okay, so this one is actually a sign that the resilience and the stability of Singapore property. Okay, it's just like every time when there's a crisis, there's a flight for safety for our money. And Singapore property is, on a global scale, a safe haven for people to move money. And there's also another interesting point that she mentioned about the cooling measures. The last time we had the cooling measures on 5th July, everybody remembered, that night we sold 1,000 units in one night. So, yep, so that is how interesting is the Singapore property market is. I just went through the list of participants. I think many of us here are actually investors that's sitting on the sideline, and you probably can relate to what I'm going to share with you in the next few slides. All right, so today's topic is what's next? Spotting the next hotspot in the core central region. Okay, let me introduce myself. My name is Alex Goh. I've been in property market 12 years. Before that, I was a civil servant. And during the Le Mans period, we accidentally came into the property scene. And lo and behold, 6 months later, I decided to join my property friend into the property market, because within that short period of time, we took action and then we benefited from it. Okay, and 12 years later, I never looked back. So let me go on to share what I'm going to share tonight. Okay. So first up, I'm going to introduce you where and why Central Core region. Okay, and how do we identify the next wave? But other than identifying waves, I think the first part we need to know has bias. We need to get ourselves ready to take action. Because at that point of time, at 2008, I didn't have all this technical or fundamental analysis of the market. Of course, definitely I didn't have Christine's data to help me to make decisions, but I took action. because after my own research, and that's how I benefited and I came into this real estate industry. Next, moving on, after getting ourselves ready to take action, we're going to share a bit on how to recognize a wave. Okay, you need to recognize wave before you can take actions. And of course, there are many telltale signs tonight. Okay, but I'm going to focus on 4 fundamentals because I think many of us here are actually first-time investors. I have a very wide spectrum. I also have seasoned investors. I see some of my names actually are foreign buyers. So we have a very diverse background, but no worries. I'm going to share something very fundamental. For more details, feel free to liaise with any of our Orange Tea and Thai agents, and we'll be more than happy to help you. And then I'm going to move on. No point just learning just the theory. I'm going to use a real life study, okay, a case study, Irwell Hill Residences, and to demonstrate how this is probably the next wave that you should ride on. Okay, and I'm going to be very daring over here. I'm going to talk about the 2 pink elephant that we have, because this case study I'm going to use is a 99-year leasehold in Orchard area, where most of the property around us are actually freehold. So I'm going to answer this question on freehold versus leasehold. And then the second question on a lot of the buyers on the ground over the past 6 days has been telling me whether the rental yield, the rentability, does it make sense? All right, again, I'm going to use real life data. So to sum up today, I'm not going to talk about big strategy, big supply and demand. I'm just going to talk about a simple plan from an investor point of view and how that help you to make the right action. Moving along, let us first define where is Central Core Region. This is the southern part of Singapore, okay, or we broadly define it as the Central Region of Singapore. All right, and it's further subdivided into 2 segments. First is the Core Central Region, which makes up of my District 9, 10, 11, my downtown core, and also Sentosa. So this is what we broadly term as Core Central Region, which is the most expensive and the most central area in Singapore. All right, you see the light gray portion over here, which they label it as fringe area. This is what we label as rest of core region. So we just remember these 2 terms, CCR and RCR. And just to give our audience a sense, okay, what is the estimated average pricing in this area? So average price over the past 15 years, you see it has been on an uptrend. Okay, for those seasoned investors who has been in market for a very long time, you understand my CCR behave like a sports car. When the market is right, you can see a rapid movement. Okay, when the market adjusts itself, sometimes they are also corrected quite soundly. But generally, you can see it's a uptrend, and you can see that every uptrend, for example, you see during the financial crisis, okay, it increased 50%, it dropped 30%, and then it recovered by 40%. All right, so overall, it's still a positive net growth, which we see is almost a 50% growth in terms of average price in this district. And the average price of a property here in District 9 is on average about 2.76 million. Just remember this figure. All right. Moving along, we also want to examine per square feet. This is also another key consideration for developers, for investors, because we always want to buy low and then sell high. As you can see over here, it's a constant uptrend, okay, up to a 92.5% increment over the past 15 years. And now the average per square feet in District 9 is 2,400, including all my very old properties, all right, and including all the new ones, all in is about 2,004 on average. So next, let me tell you why Central Core Central Region. Number one, Core Central Core Region is generally in the center of whole Singapore. Therefore, it enjoys good connectivity and accessibility to anywhere in the world. Okay, good convenience to work, live, or play, because it's just a 10 minutes drive to business center. Okay, and we have places like landmarks like your Botanical Garden, Robertson Quay. There's a lot of things to do around here, and of course, my Orchard shopping belt. And for those higher quality or the high SES people, generally they need good family amenities like good schools, whether it's government schools, international schools, parks, lakes, riverfront. So everything is also around this area. Another characteristic which is very evident in core central region, which is my good size apartment. Generally, a 2-bedroom in the olden days in Orchard, you will see is minimally it will be 1,000 square feet to 1,002 square feet. Of course, that has shrunk slightly over the years, okay, but generally you can see in CCR, the apartment size are generally one size bigger than what we have in the fringe and the outside core region. Next, in terms of the quality wise, usually in CCR, you will expect very good quality projects in terms of the layout, very spacious layout, very nice landscaping, very low density. Okay, again, it aligns to the desire for a higher quality living in this region. Then, as a landlord, you probably observe that the demographics of the tenants there and the buyers over there are generally of a better quality. So far, when I serve clients in this area, generally, they will have either private bankers to handle, or they will tell me they have already worked out the finances. Okay, and in terms of the tenant profile, usually, okay, you will see more e-passes, a higher proportion of e-passes in this area, and they generally take better care of the house. And last but not least, you'll notice in CCR, the basic law of supply and demand doesn't really make sense. Okay, for example, you will realize the bigger apartments actually sell for a higher per square feet, because most of these people is buy for own stay and they're willing to pay for it. The other side is you realize as the price go up, you realize the demand actually goes up. All right, so this is a semblance of what we call Velban goods. For example, our luxury cars, our luxury bags, you know, because there's a certain prestige and status that associated with this kind of property. So Alex, now that you mentioned they're so good about it, why isn't everybody buying into CCR? So the question is very simple. The answer is actually quite straightforward. Remember the point number 4 we mentioned? The apartments here are generally good size. Even a 2-bedroom apartment is about 1,000 square feet. And with all this good stuff, okay, generally the per square foot in this region is also exorbitantly high. As a result, high area, high per square feet results in extremely high quantum. And that is the prohibitive barrier for people to enter this particular market slice. But what if, okay, today's challenges in terms of land price, in terms of the shifting demographics, all right, and the buyer profile, developers have become very creative and they understand the market. What if this price is made accessible again? How do we do that? Okay, so first, let's look some of the example. About 12 months back, the M by Wing Kai sold on day one 70% on an average of 2,450 per square feet. This is what happened when you right price a core region property. Next, Normanton Park, 600 plus unit, and 80%, my friends, 80% of the 1 and 2 bedders in day one. Most recent example, Midtown Modern, again, 65% on day one, average 2,800 per square feet. Okay, and 90% of my 1 and 2 bedrooms, okay, was sold on day one. And we are talking about worst economy with a pandemic as a backdrop. You realize that actually in Swire, the Eden deal, 300 million, okay, in one deal. So as you can see over here, when you right price a good quality product in the CCR, there are a lot of people like yourself and myself waiting on the sideline, waiting to scoop up all these deals. And just in case you are trying to sense make, really there's so many rich people, man. Let's just run through some numbers. On the left-hand side, you see this is just a simple financial calculation that each of our agents are trained to do. So assuming, okay, a young couple, average age 35 years old, they make $10,000 a month. Actually, they can buy a property up to 1.78 million. To put things into context, my income ceiling for EC is $16,000. Means even if I earn lesser than an EC owner, I can buy something up to 1.78 million. Of course, some of us here may ask, okay, at 35 years old, how do I afford all the down payment? And I'm sure many of us here are equally guilty because ourselves also have bought under trust, we bought under our family members, we use our children's name. All right. So this 500,000 down payment, many parents, I realize, are actually helping their children to pay the down payment and let their children to take up the loan to buy the property. And this is very real. Okay, in fact, over the past 6 days, okay, I observed a lot of families is like trying to buy under two names, you know, trying to submit two ballots, trying to maximize the chance of getting a right ballot number for their children. Okay, equally, I also see another group of parents trying to buy under trust. Okay, in fact, it's very interesting. We are seeing now the NRIC number of our new buyers this year starts with T. All right, no longer start with S. All right, so these are the millennials coming into the market. But that said, have we taken any actions? Okay, the last few examples. Have you bought something at the M, the Midtown Modern, Momentum Park, or many of those other deals that Christine talked about? More often than not is we always watch things pass by us and tell ourselves, yeah, I should have joined in the race. Like myself, okay, I was lucky, I took action, okay, because my brother actually coerced me into buying a property. All right, some of us may not be that lucky having a good sibling who analyze for you and bring you to the market. But moving forward now actually is our life mission to educate buyers, okay, and agents alike, okay, to prepare. Okay, so this part I'm going to spend 5 minutes to talk about preparing yourself to take action. So over here, you see on the right side, luck is when opportunity meets preparation. So more often than not, have we sought out our finances? Have we met a banker? Have we come up with how much CPF, how much cash, and how much I can borrow? So this is always the first part that I advise buyers to do. Next, moving along is we need to understand the market. Okay. Again, I always like to joke, never trust men, never trust salesmen. I'm the combination of both. You need to see for yourself. You need to compare. Okay. So visiting show flats give you a good sensing. Okay. Because a lot of these salespeople will tell you the plus point. Of course, sometimes you need to ask what are they not telling you. Okay. But after seeing a few more show flats, you will have a good sensing of how the market performs and what's the average price. And then attending previews, such as the latest one, the Irwell Hill Residences preview, so that you can attend balloting exercise, submit your EOIs. Very often it's like, for example, the M. Many of our buyers are saying, the price likely will be launched very high. Let's go in after they open the launch. But lo and behold, okay, 70% sold on first day. Same goes for MTM, the Midtown Modern. Okay, imagine a two classic, I think the one bedroom was going at 1.18. That was the lowest one. Okay. And if you didn't join in day one balloting, by now, less than a week after, okay, now the cheapest unit over there for the same layout is 1.48 million. So that's 300,000 worth of opportunity cost. So that's the reason why we need to get ourselves prepared to ride this wave. All right. Next. Okay, if not, you just continue to miss it out. You always watch the action go by, like for example, Bitcoin. Okay, for example, US stock market. For example, the property run in the past 20 years. Okay, you need to get prepared. So for the people who are here, so which category are you? Are you category one? You've seen our show flats and placed a check. For this bunch of clients, okay, congratulations for having faith in this project. Okay, I hope that you will get a good ballot number, okay, because over the recent launches, a lot of time is 有钱买不到, okay, means you want to buy, but end up your ballot number didn't work for you, okay? So the way to do it is maybe find a family member, come in as a bulk purchaser. Next, if you have seen, but yet to place a check, I hope tonight's session with all the data and the observation I've observed on the ground, it will help you to make a quicker decision to come in to place a check with us so you qualify for the balloting exercise on the 10th of April. And for the other half who have yet to see our show flats, I hope tonight's session will show you, okay, other than what Christine has shown you, the market is really moving and Central Core region is definitely going up. Let me show you that this product is definitely something that is right price. Okay, nothing even come close to it in this region. And for those, the last category, you've seen but you decided either the property is not suitable or maybe you're not yet ready. Okay, hopefully tonight's session will give you more insights. Come back, have a chat with us, and let me share with you some solutions that we can take, like example, decoupling, trust structure, etc., to maybe to allow you to qualify to ballot for a unit over here. So with that, let me move on. Okay, how to recognize a wave. Now that you, as a surfer, you are ready, let's go on to recognize a wave. So like I say, there's many factors. So for the constraint of time, okay, I'll just list out 4 particular telltale signs for tonight. Number 1, developer. You need the right developer to have the right quality products, especially in the luxury market. In District 9, everybody is an A student. So you definitely need to have an A quality in order to prosper. Next, track record. Buyers and sellers actually takes brand into consideration. There are certain developers that has a long track record and that solicit trust from the buyers. And same thing, even for my foreign buyers, they always ask, who are the developers? Okay, if they never heard of it, they'll do another round of fact checking. Okay, but if it's a known name, usually they are more trusting and they're more willing to offer. Next, a developer, okay, the right developer usually understand the market. The shift from studio apartment to one plus study, now to understand the work from home, we now have 1 plus study, 2 plus study, etc. Okay, so when the market shift, these developers actually also shift along with them. And last but not least, for right developer is pricing strategy. Having the right pricing strategy is very important. For those who are my era one, realize, imagine your primary school, you didn't do very well. You ended up having to study 8 years of primary school, 5 years of secondary school, and so on and so forth. All right. So getting it right at the first round is important, and being able to sustain the economic headwind and tailwinds is also very important. We don't want a developer that slash price when the market changes. All right. So that is point number 1, right developer. Next, moving along, location. Okay, MRT, okay, or MTR for my Hong Kong friends over here. All right, this is extremely important, although Singapore is very small, because it attracts tenants. It also provides unparalleled convenience. So near, there is articles, okay, by Christine's department and a lot of articles online that talks about the relationship from the proximity of an MRT to the property price. In essence, the closer you are to an MRT, the higher your rental rates, the higher your capital appreciation. Okay, but that is another topic. So next, growth area. Location is the other thing is important. You must understand, for you, even as an own homeowner, staying in a growth area, buying a property in a growth area, okay, with master plans behind it, with developments around it, with empty plots around it, okay, this provides an upside potential. When you subsequently sell the property, more likely you'll make money. Then moving along, the hardware of the product, okay, the plot sizes, okay, the number of units, okay, the unit mix, even down to the layout, efficiency of the layout, the uniqueness of the layout, and the software such as the facilities, the landscaping to provide that exclusive feel or the product differentiation. Because everything, remember, is A-class around here. So you must be special, okay, in order to command your value. And last but not least, design. There are a lot of award-winning projects around here. So same thing, this is the soul. When I drive past your project, do I recognize it? Some projects is very iconic in terms of external facade, okay? So even foreigners will recognize, hey, this project is so and so project, all right? So that is also important. Last, but the most important is actually pricing. No point you have the first 3 points right, but the price is off the charts and you cannot find someone to buy you out or you can't even enter. So the entry price is also a very important consideration, if not the most important consideration. And when you enter the property, the next thing is you need to hold the property. So the rentability and the rental yield is the next consideration. And last but not least, how do I exit? So usually when I buy a property, I always think of the exit strategy and who will buy me out. Okay, that is when you are an investor. So with that, let me move along for tonight's case study. So let me just give you some background on this project. Okay, Irwell Hill Residences is developed by CDL, City Developments Limited. So I think that's quite a household name in terms of developers. It has two blocks, the North Tower and the South Tower, 36-story high. Okay, this area around the area is generally 20 to 24-story high. So it has a very unblocked view for those homes own stayer. Okay, next tenure is 99 years, quite consistent to all the GLS we have so far. Okay, then we have 540 units, which is a good size. Okay, let me elaborate a bit more on this. Why 540 is a good size and how is that relevant to you as a homestayer or an investor? So number one, the maintenance fee will be lower because there's more families to divide the cost. Number two, there is a critical mass, means subsequently when you want to resell or rent out your property, it will be easier because there is an existing local market over here. Next, the vacant possession is estimated with Q4 of 2025. And another interesting point over here, which I boxed up, the plot size is 137,000 square feet, which is very rare in this region because most of the land supply in District 9, 10, 11 is from en bloc or acquisition. So usually the typical size is 30 to 50,000 square feet. So having a big government land sales plot that's above 100,000 is very, very few. All right. Next, point number one, developer and the team. Okay, so CDL, like I say, is a 58 years history. So they have 106 locations in 29 countries. So these are just some of their products, okay, that are iconic and very inspired living kind of projects. Like for example, the New Futera, South Beach Residences, Boulevard 88, Amber Park and the Stratosphere, okay, Novell 18, House of Handy. So these are all very iconic projects. I'm sure some of us have already bought a unit over there. All right. Then let me show you what is an example over this area. In District 910, so we see New Futera, a project that was basically launched in 2018. You can see the price has already increased 22%. So we reverse engineering this 700 square feet back to a 1,800, the 3-bedroom. So basically you have made $1 million if you have entered 2018. So to again reinforce the point that CDL knows how to play the game, let's look at another project that's nearby, Gramercy Park. Same thing, launched in 2016. By now, okay, in 2020, 2021, you have also made about 22%. So very consistently, every 4 years, they make about 22%. Okay, so again, I hope this demonstrate that actually having a good developer, okay, is actually very important. Next, a good developer usually brings in a very good consultant team. So over here at the Irwell Hill Residences, they have MVRDV, which is an award-winning architect in Holland, Netherlands. Okay, so these are just some of the samples. You can Google them, MVRDV, and you realize that some of their works are very loud, but yet contextualized into the local context. All right. So over here later, I'll share on the design strategy they have on this project. But of course, okay, other than a good concept, you need a local architect to make sure you deliver it. So some of the works for ADDP, which is our local architect, Martin Modern, New Futera, Pliveder and Grange, all these are all known names in District 9. And landscaping, another important facade of a good project. Park Esta, Kenridge Hill Residences, Jadescape, that is our Eco Plan Asia Private Limited, which is our landscape consultant for this particular Irwell Hill project. So you can see from the artist impression, actually all these are all very nice projects, and you can check out New Futera. Okay, actually it's a very, very breathtaking project. Second thing I mentioned is location, location, location. You can see over here, a summary of this project. Actually, it's very simple. District 9, 2 minutes to MRT, 700 meters to Orchard Shopping Belt, 10 minutes to almost everything. For example, in the northwest corner, you have your botanical garden. Southeast corner, I have my Marina Bay. So everything is actually just nearby within 10 minutes. And I have blown up over here. Okay, I also want to show audience tonight is how close I am to the MRT exit over here, where my laser pointer is. Okay, it's about 120 meters. I walk myself in less than 2 minutes. Okay, so this means you will have very good tenant rentability and very good rental rates. And subsequently, when you resell, okay, this will also help you to command a higher value. Not just only its convenience location, River Valley has always been a highly sought after, be it whether you are a tenant or you are a young couple or you are looking for a lifestyle home, etc. Okay, so now we actually upgraded, okay, River Valley, okay, which have all this good stuff, with Thomson East Coast Line. Okay, previously, why people avoid River Valley is because there's no MRT. Okay, but now all this has changed with Great World MRT coming online. That's less than 2 minutes away from this project. Next, we also want a place, remember I mentioned you need to have government plans, you need to have rejuvenation plan, master plan, etc. So over here, STB has plowed in 1.6 billion, and then the master plan, you can see the whole revitalization of the Orchard down to Tangling, Somerset, Dhoby area. Okay, so these are what the government will put into the region. And what does this mean to us as homeowners? Okay, it means an intrinsic increase in the value of our properties. Not only that, okay, the other way of capital appreciation is future land sales, where we see empty plots such as the one that's north of us. Okay, this yellow plot, this is a reserve site. Okay, and then on the new Great World MRT, there's 3 other plots over here. And further down to the riverside, okay, there's some more reserve site. So whenever this future land sales, okay, gets tendered out, it means a capital appreciation in the precinct. And even better, just now Christine mentioned that Bayron Bay, which I have the article over here, okay, Bayron is now selling at 2,377 per square feet per plot ratio. So assuming they transact at this price, means there's no way, okay, it will sell below 3,300. Okay, so that is the bare minimum break-even cost for them. Okay, especially with a increase in terms of development charges, etc. All right. So back to the MRT. So I just want to show audience tonight actually the location-wise how convenient it is. Okay, for example, Great World MRT is 4 stops from every single colored line we have in Singapore. So for example, Orchard is just 1 stop away. Outram, the purple and green line, is just 2 stops away. Okay, for my downtown line and circle line, Botanical Garden, okay, it's just 4 stops away. So that's how convenient this location is. Next, of course, a good developer, a good location, we also need a good product. So over here at Irwell Hill Residences is a large plot, 137,000 square feet, elevated plot, which gives us the prestige. Okay, those landed owners will understand that. Okay, and one of a kind landscaping. And remember, it's 36-story high, so expect amazing view and perfectly balanced for both investors and homeowners. Let's just see some of the artist's impression. So this is the gym, and this is the pool, and this is the sky garden with the orchard as the backdrop. So first point, large land plots. So this is the government land sales and en blocs in this region. Okay, you can see in the past 4 years, there's only 4 plots that's above 100,000 square feet. And interestingly, we are the only land plot that was government land sales in 2020 and at a very attractive price of 1,515 per square feet per plot ratio. Okay, so this means that this can translate to a better pricing for us as consumers. Okay, next, unit mix. Okay, you can see first on the left hand side, this is the schematic chart or the cross-sectional area. So it's a total of 36-story high. Okay, there's a sky terrace on the 24th floor. Okay, why I boxed up green and yellow? Okay, from the indicative prices, I postulate that okay, the developers will be looking to sell the units below the 23rd floor because it's very attractively priced. But for the homeowners who desire an unblocked view, there's a slight premium because remember, 24th story is the prevailing height around us, and anything above that, you will enjoy an unblocked orchard view. Okay, so that's very likely the pricing strategy. Expect very good pricing here and expect a slight premium when you have an unblocked view. Next thing, we go on to see the total number of units. 540, again, means you have a good resale market, a good rental market, all right? and you can hold the prices. Next, maintenance fee will be slightly lower for this bigger number of units in the project. And you see the developer has cleverly polarized, okay, the layouts. For example, in the first red box over here, you notice my studio 1 plus study, 2 classic, 2 premium is very right size, okay, 400 to 650 square feet. So this makes this very palatable to young couples, okay, upgraders, okay, or you just want to stay near your parents in the precinct, okay. So this one becomes a very attractive quantum. But for those very seasoned investor, or you want a place that you can enjoy the space, okay, you notice that my 3-bedroom premium is actually larger than 4 bedrooms in the City Fringe homes. Okay, 1,002 is considered a very good size. Okay, and for my 4-bedroom, close to 1,006 square feet. So that's extremely good size for homes owners. And like I mentioned just now, very good maintenance fee. Okay, those among us who stays in Holland will realize that even my 2-bedroom apartments is probably $500-600 per month in terms of my maintenance fee. So 300, okay, is actually very, very reasonable in this precinct. So still moving along on the point of product, you realize that actually full condo facilities is very rare because the plot size is very small here. So you can see that here we even have tennis court, okay, a 50-meter rain-free pool, a 30-meter infinity pool, all right, a 1,300 square feet gym, okay, and a spa corner and a tranquility corner. So full condo facilities. The other selling point over here is because of our big plot size, okay, you realize that the architect actually designed the block to be very far apart to maximize the space over here. And they also staggered the 2 blocks to maximize my view and also to make sure that the residents enjoy maximum privacy rather than we look into each other's window. Next, the lush greenery feel, later I'll show you some of the artwork, will give you a feel somewhat like my Goodwood. All right, so this is the kind of lush greenery feel you should expect, like staying in botanical garden. So, but of course, all these are my hardware and software, okay, of a project. But the soul comes from the design. So MVRDV actually came up with this strategy of creating 2 botanical gardens over here in Irwell Hill Residences. So how do we do that? It's actually by playing with the elevated plot over here into this beautiful cross-sectional area with staggered mezzanine, okay, which for my clubhouse, and then the rest of my facilities on the ground floor. All right, and a playful play of the window facade to make it like creepers that climbing up the tree, okay, which is my 2 towers. All right, so just to show you, okay, how the end effect is. So this is one of the heritage tree that we have on site. There's a total of 4 of them. But on the right-hand side, this is the external facade. You notice how they play with the window facade to give it its character. And very interestingly, they use this champagne gold shimmer that will change as the evening sun sets on the building. It will actually have a different feel. All right, so you must come down to the show flat, watch our video to have a look of this film. So this is the soul of the project and makes it distinct from the rest of the District 9 properties. But of course, the most important thing tonight I want to emphasize on, let me spend the next 5 minutes on it, which is pricing. Okay, you look at on the left-hand side, you realize my indicative price is very, very attractive. Okay, this is almost like a rest of core region pricing. So for example, we see Midtown Modern launch on average 2008. Okay, let's just see the pricing at Midtown Modern. So you can see over here, the average per square feet is about 3,000 for the smaller units. And even my 2-bedroom is about 2,007. So over here, we see my starting price is only 2,004, 2,005. And in terms of quantum, okay, the market can absorb up to 1.3 million. And you look at my 1 plus study, all right, it's about 1.1 million plus minus. All right. And similarly attractive is my 2-bedroom. You realize the average in Midtown Modern is 1.7 on day 1 sales. Over here, I have 1.4, 1.6 million. So it's extremely attractive. Okay, this is what has been sold. Let's look on what's currently my nearby cousins in District 9 asking. So I just put side to side another project called Copper and Newton. You can see Copper and Newton. Okay, so that's near to the District 11 site. That's an intersection between 9, 10, and 11. All right. You can see their 1 bedroom is calling for 1.28 million, whereas we are starting from 1.1. There are two classic 1.6, we are starting from 1.4x. And there are two premium, okay, is already calling at 1.75, whereas we are doing 1.6x up. So you can see actually Irwell Hill Residences is really priced to sell, and very likely will have the same effect as Midtown Modern. 90% of the smaller unit will probably be cleared by day one. So if you already placed a check, please hold on to your ballot ticket. Okay, and if you have not, please make haste to come by to see our show flat and place a check with our Orange T agents. So next, not just only one particular project, let's look at the whole precinct of CCR. Okay, you can see actually at 24XX up, we are actually very reasonable. The only one that we have come comparable is actually the M by Wing Tai. Okay, but I think I hear that they are revising their price. A new price list is out, so this price may not be valid anymore. All right. And we ask ourselves this question. So a lot of buyers will, over the past few days, tell Alex, I have a lot of options. So let's re-examine our options. Okay. For example, for one bedroom, okay, we see the bottom left, that's my indicative price. We see 1.1 million for 1+ study. What can we buy in City Fringe Home? You can see my Mayfair Gardens, okay, my 4th Avenue, my Van Holland, my Jadescape Sterling, okay, my Copper and Newton, Atelier, Amber Park, all this has crossed your 1 million, 1.1 million. So this is what RCR is calling, and we are calling at 1.1. So it's not unfair for me to say that you are now buying CCR at RCR price. Similarly, let's look at our 2-bedroom. Okay, so what can you buy with 1.4, 1.5 million? We see Mayfair again, okay, 4th Avenue, Van Holland, Sterling Residences, Cambridge, okay, all this has crossed 1.4x. So as you can see, if today I can buy, if your ballot number is nice enough and you manage to secure a unit at 1.4x, it's almost as good as saying you are buying a BM7 series over at a Toyota pricing. All right. So that is the current calling price. Let's look at what's transacted to be fair. So you can see One Pearl Bank, District 3, their studio apartment is going at 1.18 million already. Even the lowest price one is 1.05. We look at House of Handy, Copper, One Pearl Bank, etc. Okay, you see they are 1 and 2 bedroom, the pricing. These are transacted price, my friend. And we look at the older resale condo. Remember, Alex just now say the older one, the quantum is very big because area is big. Cosmopolitan, a 2-bedroom costs you 2.5 million. Okay, that will easily get you a 3 premium over here at the Irwell Hill Residences. And same goes for my Tiara. Okay, a 3-bedroom costs 2.4 million. That's the entry price. We are not even talking about the highest price over at these two projects. So again, okay, on pricing, this is from URA. You can see that other projects like Midtown Modern, they're transacting at 2008, same for Riviera. Okay, and in terms of rentability and the rental per square feet, okay, for Cane Hill 9, 8 St. Thomas, again, this is real life data extracted from URA data. So the median is already 6.5 per square feet for medium rental. All right, so you can expect a very good rental yield when you buy into Irwell Hill Residences at 2526 per square feet. Okay, so this next two chart I'm going to show you is actually the banding that we expect the developer to launch at. So even if you get a pretty high floor, okay, unit for a 2-bedroom classic, okay, which is our 2-bed 1 toilet, you're expecting about 1.7 million. So if the budget allows, okay, try to push for slightly higher floor, because remember, all these units will be hotly contested just like other projects. Okay, so don't just try to enter at the bare minimum. Okay, try to go somewhere in the mid-range at least. All right, but this one I'll leave it to your Orange T agent advise you how to do your pricing strategy. Okay, to maximize your chance to secure a unit here. All right, and this is for my 3 and 4 bedroom. Okay, with that, I've come to the end and I'm going to clear 2 more objections, okay, which is freehold versus leasehold. Okay, and last is actually rental yield and rentability. Okay, so freehold versus leasehold. As you probably figure out, around the area, most of the properties are actually freehold. okay, which makes Irwell Hill residences, this is a constant objection I hear over the past 6 days, okay. But end of the day, I always explain to my investors, my buyers, okay, if you are going to sell this property eventually within the next 15 years, the performance between a new freehold versus a new leasehold is about the same. Later, I'll back it up from the data. Okay, and from a technical analysis point of view, we use this table called the Ballas table, okay, which examines the depreciation of a leasehold when we baseline against a freehold property over the 99 years. So you can see over here on year number 1, okay, if side by side, same plot, same area, same specs, everything, okay, a leasehold 99 will actually worth 96% of a freehold property. Means if I sell the freehold property at $1,000 per square feet, that 99 years should cost about $960 per square feet. So as the years go by, you realize the residual value of the leasehold actually drops, and it becomes a steep degradation when you enter into the last 30 years. All right, but this is a technical, what we call it, theoretical studies. Let us just look at some charts. Okay, why I say that in leasehold and freehold, okay, the performance is very similar. I took these two projects, okay, Martin Modern, the pink color line, okay, which is a leasehold 99 project in District 9, okay, Gramercy Park, a freehold project also by CDL, okay, in District 9 too. But freehold versus leasehold, you see the performance actually is very similar. In fact, the 99 years performs slightly better. Okay, there is two reasons why I explain this. Number one, entry price. Okay, 99 year theoretically is lower. Okay, number two, trade volume. Generally, people who buy freehold properties, they don't have this thinking of, okay, I buy 3 years later, 5 years later, when SSD expire, I will sell. Okay, freehold people usually buy and hold. So there's not much trade volume, means the prices will not increase as fast as a 99-year project. So this is the two reasons why you see while the performance is very similar, but generally 99 years as a rule of thumb will perform slightly better in the early years. Okay, but of course, why did I qualify in the early years? Ourselves, we got city lights, okay, many years back. Okay, so we at that point of time, there's another project called City Square Residence, which is freehold in the same precinct. Okay, you notice the blue line, which is city lights, okay, is actually leading City Square, a freehold property, for the first 12 years. Okay, a good 12 years. Okay, city lights in terms of rentability, in terms of rental per square feet, in terms of capital appreciation, it win a freehold property. Okay, it's just like human. Okay, in early years, okay, we both run similarly. But if we take care of a health like a freehold property, okay, we actually hold value. Okay, so this is freehold versus leasehold. To sum it up, if you were to sell less than 12 years, all right, chances are your leasehold property will perform better. Okay, so that's a food for thought. Next, people always say that, Alex, maybe I don't buy a new launch, I buy a resale. Okay, I don't buy a new launch freehold, I may want to buy a resale lease freehold. All right, so I also did the benchmark. Again, I using Martin Modern. Okay, since 2017, I baseline it against resale freehold properties. Okay, so you can see actually there's a stark performance in terms of the difference of how they perform. Rivergate, okay, one of our classic in this region, okay, increased 21% over the past 4 years, whereas Martin Modern increased 32%. Whereas Martin Place Residences, the trade volume was very thin, so the increment was actually slower and it only increased 8% over the past 4 years window. So you can see actually doesn't mean freehold is good. Okay, of course, if you keep until 99 years, freehold will still win. Okay, but if you're talking about buying in and within the next 10 years you would exit, chances are your leasehold will perform equal, if not better. Last point tonight, okay, is actually price and rental. Okay, so you can see just now, this one is extract from URA. Prevailing transaction rate in nearby projects is about 2008, and rental-wise is about $6.50. And not just only in terms of price per square feet on the right-hand side. So these are some of the leases, okay, in this region. okay, we see in the range of $7, $8 also possible. We look at the volume. Okay, so just only in the first 2 months of 2021, we have 1,000 rental transaction over here. Why? Is because everybody wants to be in Central Core region if they can afford it. Okay, so with this, I end off tonight's sharing. Okay, so please don't wait. Irwell Hill Residences is the right developer, right location, right product, and most importantly, the right price. Okay, so get yourself ready. If you have not seen our show flat, please make an appointment with our Orange Tea agents and don't miss out, just like some of our buyers who missed out in Midtown Modern. All right, so on the bottom right, this is our viewing schedule. We are open daily, okay, until 5th of April. Okay, for weekends or on public holidays, we start our viewings from 9 a.m. to 10 p.m. at night. And for weekdays, we start our viewing from 10 a.m. to 10 p.m. at night. Okay, feel free to engage any of our Orange Tea and Thai agents. Okay, and please visit our show flat before the last day to view our show flat is on 5th of April. Okay, and the check collection must be done by 6 p.m. of 6th of April. Okay, these are the 2 critical dates you need to remember. Okay, most important, this weekend, I hope to see you over the Good Friday. Okay, and then I'll see you over the weekend. With that, I would like to hand the mic back to Ramesh. All right, and thank you very much for staying with us. Okay, and thanks for joining us for this evening. This is Alex Go. Thank you.
Hey, thank you, Alex, for that very excellent sharing. I must say you have summarized very good observation from the ground on the buyers and tenant profile and prime districts, as well as the 4 key considerations buyers should consider when buying a luxury property. You've also given a very good overview of comparable project transactions in the surroundings, which I'm sure our listeners found very, very useful. So thank you so much for taking time off your Thursday evening to share so much of insights and market analysis with us. Thank you, Alex. I still feel it's a dream for many Singaporeans to move into prime district of Singapore's core central region. I think it's exciting that a new project like Irwell Hill Residences is priced so attractively. It's definitely a rare opportunity for anybody with a decent amount of equity to move into one of Singapore's most prime locations. So I hope listeners, today, if you are free over the long weekend, do feel free to join us at Irwell Hill Residences Sales Gallery. I think Alex already mentioned the opening times. You open until 10 p.m. for appointments. So do contact any of our Orange Tea agents for an appointment. Gentle reminder, if you'd like to obtain a copy of the presentation report today, feel free to approach your representing Orange Tea and Thai agent for a copy. If you wish to attend our property webinars in the future, or you still have burning questions to be answered, do also stay in touch with our Orange Tea and Thai agent. I'm sure they'd be more than happy to assist you to keep you updated on the latest happenings. If there are no further queries from the ground, I would like to thank everyone for making time on a Thursday evening to join us for our property webinar. And I wish you all a very good evening. Until next time, this is Ramesh signing out. Thank you.